Welcome to Under the Hood, a detailed look at the investing process that we found to be successful. We sell iron condors that expire tomorrow. We leg into these iron condors using a series of automations and bots created at www.optionalpha.com. Each iron condor bot has four automations. The market monitor runs at 3:45 each day and attempts to predict the direction of the market for tomorrow. The calls and puts automations orchestrate the daily investments of puts and calls and run 10 minutes before the close of the market. This minimizes the amount of time that we have two sets of active trades and most closely links tomorrow's trades to today's closing price of the underlying asset. The gap monitor looks at the opening value of the underlying asset and determines if it gapped one direction or the other since the previous day's close. If it has gapped more than 1% in either direction, it suspends trading for the day. The FOMC CPI earnings check runs at the open of each market day and helps us avoid having money in the market around reporting days for the Federal Open Market Committee, the Consumer Price Index, or earnings reports. These events can cause the market to spike unpredictably in one direction or another. Next, we'll look at the inputs. This bot and its sister bot, the Iron Condor Puts, have virtually the same inputs, except where it says call here, it says put in the other bot. These two bots are primarily responsible for making our investments day to day. To make changes in these inputs, simply click on the pencil icon in the upper right-hand corner. Each bot is completely self-contained, meaning that the changes in a bot's inputs in one bot has no effect on the other bots. Consider each bot as its own separate program. So let's take a look at the sample inputs. The power switch defaults to on. If you turn it off, it will suspend all new trades till you turn it back on. Friday trades default to on and tell the system that you want to initiate new trades on Friday that expire on Monday or Tuesday of the following week. If you prefer not to have money in the market over, simply set Friday trades to off. The symbol is XSP. XSP was chosen for a number of reasons, including that it settles in cash at the end of the expiration day. No early assignments are possible, so ex-dividend dates are not an issue. XSP also has tax benefits. This input simply allows you to experiment with these bots while trading something other than XSP. If you choose some other symbol other than XSP, you should be aware that there is no attempt in the code to minimize loss or prevent early assignment. We simply let a trade expire. Position size lets the system scale the number of contracts based on the net liquidity of the account, along with the size of the spread. Recommended values range from 5% to 10%. Expiration is set to 1 to 5 days to allow for Friday investments, since this is calendar days. The system looks at the earliest expiration date that meets the investment criteria. Price gap works in conjunction with the gap monitor bot. If the opening price is 1% more or less than the closing price of the day before, a bot tag is set to tell the system gapped open. Trading is typically suspended for that day. The VIX trigger point is the maximum implied volatility for the Standard & Poor's 500 that we allow. Trading is suspended if the VIX gets above this number, as we think that the market is too volatile for us to trade profitably. I'm going to skip over the delta discussions for a moment and tell you that the long call defines the size of a vertical spread. Our default is $3. And now back to the deltas, where a picture is really worth 1,000 words. The normal direction of the market is up. We use the market monitor automation to help us understand what direction the market is moving today. By selling both a call and a put spread each day, we create an iron condor that brackets the underlying price. Ideally, we want both the put and call spreads to expire worthless, thus allowing us to keep all the premium we generated from selling them. When the market is moving up, we want to give the underlying asset more room to move up before it affects our investment. To do this, we set the call short leg delta to 0.10 and the put short leg delta to minus 0.15. When the market monitor tells us that the market is headed down, we want to give the underlying asset more room to move down before it affects our investment. To do this, we change the put short leg delta from minus 0.15 to minus 0.10, moving the put spread farther away from the underlying asset, and change the call short leg delta from 0.10 to 0.15, shifting the call spread closer to the underlying asset and earning more premium in the sale. You may need to think about this for a little bit, but that's how it works. Here's an example of one of the two automations we use to create iron condors. The market monitor, the gap monitor, and the FOMC, CPI, and earnings monitor all provide information to the calls and puts automations. Before opening a call or put of a vertical spread and creating the iron condor, we determine the following things. First, the market did not gap open. The power is on. The implied volatility of the Standard & Poor's is below the trigger point. The FOMC, CPI, and earnings reports are not due today or tomorrow. Today is Monday through Thursday. And finally, what direction is the market headed? If it's headed down, we shift the put and call spreads down to give the underlying asset more room to move around towards the bottom of the range. If it's headed up, we place both sides of the iron condor in their normal positions. As part of our day-to-day routine of reviewing our recent positions, if we find a loss, we open the loss mitigation bot, select the dashboard, and click on the ARM Loss Mitigation button. This sets a bot level tag that tells the system to run the loss mitigation automation at 3:30. You can do this any time of the day or night. If the current time is before 3:30 on a trading day, the system will run the loss mitigation automation at 3:30. If the current time is after 3:30, the system will run the loss mitigation automation at 3:30 on the next trading day. The loss mitigation automation creates an additional iron condor with all the normal checks and balances to attempt to offset a recent loss. Once armed, it will run one time. If you want to offset more of the given loss, simply arm it again the next day. If a loss mitigation trade creates a loss, my advice is to turn the power off and wait till the market stabilizes. As time goes by and your account balance grows, you'll need to manually adjust the allocation to keep up with the overall account balance. The notifications bot is set up solely to keep you posted on the status of the market. It will send you a message to whatever email account you have registered with Option Alpha. I have mine going to my phone so that I can keep track without having to be logged in. So that's under the hood. If you want to see the actual Option Alpha code that implements all of this, I can provide that on request. But that's it for now. Thanks for watching.